Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at none other than ticker symbol CVRx. That's their name as well, CVRx. We're looking at the monthly chart. As we can see, um, they've only been around for less than 3 years. I typically like companies that have been around for a lot longer as we can get patterns and trends in the chart. For this, it's pretty abysmal. I mean, we maybe have let's see, cup and handle, left side of the cup, right side of the cup, handle, reversal. We're going to find out. So, does this stock deserve to be $8.54? What are institutions and hedge funds doing? We're going to be doing some advanced charting on this one as well on Thinkorswim CVRx. I don't think I've charted this one before. Yeah, this I typically don't chart unless they've been around for 5 to 10 years. As we can see here, they haven't been around that long. But we'll do our Fibonacci arcs here. We'll do our supports and resistances and see where the stock can go. We'll look at the balance sheet and see where the potential stock is going in the near term. And the last thing we're going to do is hit the subscribe button because that is what we do. So RSI is at a 40. That's with the bears. Momentum obviously in a downturn, potentially reversing. Maybe. Money flow looks like it is. It had all-time highs and it is going down. We will see what institutions and hedge funds are doing because FinViz does have delayed data. Fintel, right here, the website we're going to look at, does update the SEC filings as the days go on. So today's the 10th. Yesterday was the 9th. I'm sure we'll see filings coming in from yesterday. The relative momentum indicator went from the bottom of the ocean and it looks like it went up and is just taking a breather at the moment. So, couple things. Number one, this company loses more money than they make, barely. So typically this is an automatic no-go for me. Uh, but this again, it's a barely. So we're gonna look at the website. We're gonna do some deep diving. We're gonna look at the technicals. We're gonna look at the uh, balance sheet. So, uh, is this a biotech? It's a medical device company. So, no PE or no forward PE. We'll run my calculation and see what we can get. Quick ratio is an 8.85, which is fantastic. I'm guessing they have a decent amount of cash. I see that the debt and the long-term debt are the same, which means they probably have not tackled their debt situation in a moment. Um, EPS past 5 years, you can't really. I guess they've been reporting data, but it's not. I don't think they IPO'd when they were reporting. So EPS negative, but sales very positive. That's a very good sign. Insiders are buying, it looks like. So we'll take a peek. Institutions looks like they are selling a little bit, but that could be older data. We'll find out momentarily. Gross margin, absolutely insane. So we're gonna look into that. Shares, outstanding shares flow, absolutely insane as well. So um, normally, if a company is losing more than they make, I move on. But with the numbers being $10 million off, and look at this right here, this is absolutely incredible, right? You can't really fight that. So, yeah, we'll see what's going on. Their EPS looks like it's gone from really good to bad, but it's also reversing. Good. Let's get ready for this stock price calculation. So I only add the market cap if the stock has a market cap over 1 billion because that's when you start to really see the impact. So this calculation is perfect for stocks like this because it's under $1 billion market cap and there's no dividend. So this is like one of the better scenarios for a stock price calculation. So income is negative 54,390,000. Is that billions? Yep, I did billions. Okay, we're gonna remove 3 zeros. There we go. Sales is 44,390,000. All right, let's look at their cash and their debt situation. Before we do that, okay, Q2 of 2024, they did 11.8 billion. Q2 2023, they did 9. Did I say billion? It's million. Um, they paid slightly more to make 2.31 million more. So I think, yeah, they spent about 400,000 exactly to make an extra uh three two they spent 400,000 to make an extra 2.3 million. Good for them. And in terms of net income, I mean, they've been relatively close. So that's something to note. Now, this is what I like to see. The CEO spending 250,000 doll hairs buying their own stock. Good on you, Kevin Hikes. And then we got the director spending about $47,400. Not bad. Um, yeah, that's that's the kind of stuff I like to see. They have 70 million in cash. So 70 million in cash. It was 70 million 400,000. The debt. 30 million 340,000. Okay. Really quickly, total assets 95 million, total liabilities 40 million. So assets dwarf liabilities 2 to 1. That's green flag there. That's great. Um, and their total debt, yeah, we could see they really haven't touched their debt. Their debt doubled essentially, and they've been paying off very, very tiny amounts. Actually, it is 20,000. They pay off 20,000 a quarter, it looks like. So that's where we're at there. Um, Cardiovascular medical device company. So we're gonna take our calculation here and we're gonna divide it by our shares outstanding of 20,880,000. This is a $1.44 stock trading at $8. Now, my intention is not to ruffle any feathers, but historically, my calculation is pretty decent. We have analyst target price of 1360. Um, what are institutions and hedge funds doing? Let's find out. So ownership is at 3143. Now it's at 6572. So that's over a 100% increase from 31 to 65. That's crazy. Let's see. Johnson and Johnson has a nice stake. They sold like 20,000 shares. Then Sana Capital added 2.24%. Cooperative Guild Healthcare sold 14%. No major changes. I want to see what Vanguard and BlackRock are doing if they have any positions. Hello? Hello? Vanguardia. Okay. Oh yeah. They have a lot of exposure to this company. Here we go. 594,000 shares. They added 5.64%. So I'm guessing BlackRock also added because they like to mimic each other. No, BlackRock decreased. So BlackRock owns 764,999 shares. They decreased 4.7%. JP Morgan added 296% to 29,000 shares. Crazy. Charles Schwab has a position. Royce and Associates. You could go on this list and check for yourself. So this company, number one, am I on drugs? This guy's face looks a little off, doesn't it? It looks warped or like animated, or it's like a mask, right? Do you guys see that? Am I tripping? This dog even sees it too. He's like, bark, what the hell's going on? Bark, bark. Okay. So if you suffer from symptoms of heart failure, medications prescribed, uh, Barostim may be the right therapeutic option for you. Let's let's just see what the internet's saying about Barostim. So Barostim is a simple and implantable device that works by stimulating baroreceptors, blah blah blah. So outcomes, exercise capacity. They were able to walk 60 meters farther in 6 minutes. Okay. How many meters in feet? Don't make fun of me. I know there's 3 feet in 1 yard. So 1 meter is 3 feet, almost like a yard. Okay. So they can walk an extra 60 yards in 6 minutes. That's pretty good. That's a half, more than half a football field, but 6 minutes. Quality of life, 3 times. Okay. I mean, can you really quantify that? Functional status, two or three, at least one whole, I don't know. High response rate, 94% of patients, significant improvement in at least one of the three measures. Okay. The device has been shown. Yes, we know. Barostim question 3 months ago. Let's see what Reddit's got. I mean, it looks popular. Success, yeah. Um, Reddit has everything, I guess. So we'll see what Reddit says. I wonder how much. Turn your. I mean, if you think about, so take a step back. Cardiovascular events in the US are one of the leading causes of death. Um, so this, I don't know why this isn't more popular, honestly. Um, okay, really good friend of mine has been dealing with a lot of heart issues. Barotism would improve his life, but Medicaid won't cover the procedure. Whoa, 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 whoa. It costs over a $500,000 out of pocket? Okay, this person had 105,000. Northwest. India is popular. What? It costs so much money. Wow. Okay. So if it costs $500,000, okay, so they have good at sales. So this is something I could get behind. I like this. It's been proven that it works. Cardiovascular, how many deaths in the United States are associated with cardiovascular issues? It's got to be like a crap ton, right? Heart disease is the leading cause of what? Cardiovascular is the leading cause of death in the US. So it's the number one cause of death. So this device helps you. All right. All right. Okay. What is Renaissance Technologies doing here? Because they are a pioneer when it comes to investing early. Let me just take a peek. Renaissance. They sold out. They sold out on Friday, actually. I'm recording on the 10th. They sold out yesterday. So, um, I mean, sales are doing very well. I wouldn't mind starting a position here and honestly just dollar cost averaging on the way down because this is something that addresses the number one cause of death in the US. Gross margin 83%. Are you flipping my flapjacks? I never say that, but it came to my brain. So, okay. We're gonna do a bit of advanced charting here because I'm just in awe, really. Uh, so there is a gap to be filled at $12.98. Again, right cup handle. So we're gonna do a lot of things. $4.60. All right, so I thought I could find a
There
way
is a
to
way.
snap
One sec.
my drawings together. So we'll do 460 here. And right there. And this puts us at a channel. Now it's snapping them. Okay. Right there. Or I think right there. Okay, you're probably asking, Ryan, why'd you choose that? So we have a great test of support, perfect support, perfect resistance, support. Test of support, perfect supports are here. Tried to break through, fell through, perfect resistance. So this is our golden channel, and I refer to that as the channel of reference where we want to see the stock get back in this channel eventually, ultimately. Continuing to draw. That brings it, yeah, it's not realistic. Right there, that's not very realistic. Let's do it again. That's a channel. This is okay. So as I continue to draw, I realize potential things. Again, this could be a cup and handle, but typically there's not a gap down like this in a cup and handle. This could also be an inverted head and shoulders. We have our left shoulder here and our potential head building with a right shoulder eventually. Could take multiple years. Let's try our Fibonacci arcs 460 here. Come on, baby. 460. We'll come back. 33.14. I think it snapped to it anyway. Let's just see. Yeah, it snapped to it. Perfect. Okay, okay, perfect. So looking at our support, so basically what I want to do is I want to see how well the candles are respecting this Fibonacci arc cycle. I'm not, what is this? Come on, baby. Arcs, Fibonacci arcs. So it's going to give us a level of confidence. So basically we have perfect support here, perfect resistance, falls through perfect resistance, or not, that's not perfect resistance. This is perfect resistance, almost perfect support, perfect resistance, perfect support, great support, great. Look at this. This candle is exactamundo right on the outer ring. Comes through, breaks up. Perfect support for this candle, falls through. Great support here, perfect resistance, and falls through. So that's decent. So what I'm going to do now is see what the potential downside could be. So I'm going to go from 33.14 and let's see, I'm at $1.89 right now. I mean, this could be this is reasonable. And I say that because this looks very well. The candles look to respect this very well. So the candle's a part of our original pattern in this here. Perfect support, perfect resistance to our purple candle, perfect support to our purple candle. Gap down, perfect resistances for two candles. This has a potential low of 189. And I'm not trying to upset anybody here, but I'm just trying to be realistic because they are losing more money than they make. Although it's $10 million, it's not much. Um, they could improve the business, and I think if they can get some insurance exclusions and exemptions to make it cheaper and more affordable, I think that would really help this company. Um, so overall, I mean, 189 is potential. I mean, I don't really want to. I'm gonna say 189, but let's just see if we activate and we go like, what is this? Could this be our all-time low? So the low here was 640. Yep, so 640. Could this be our all-time low? We have great support, perfect resistance, perfect support, perfect resistance, perfect support, perfect support, perfect resistance, great resistance. I mean, we could have already hit the bottom. Like if we're looking at Fibonacci arcs, the candles are respecting this extremely well. And they also respected the other Fibonacci arc very well too. So, you know what we'll do? We're going to do 189, I think what it was. No, it was, yeah. That's actually pretty good. Yeah. Uh, I'm gonna make it not as noticeable because I don't really want it to be too visible since it's not that, I mean, it's still pretty noticeable. So what I'm gonna do, I like this. It addresses a cardiovascular problem. I think it's only gonna get worse in the US. I think people love to eat their food. They love their butter. They love their chocolate. They love eating things we shouldn't. I mean, I'm guilty. I love pizza. I love a lot of foods. So I mean, this device is potentially life-changing. It's just pretty expensive. So I feel like I need to add to this one, honestly. I'm putting on my note glasses. CVRx. And you might be asking yourself, why would you add if it's going down? Well, when stocks go on sale, I love that opportunity because I'm going to be around for a while. This company, although they are not profitable, they are on the right path, and I'm using this as my guide. Look how well. Look at this. This is insane. Here, number one. What's going to have to happen, unfortunately, but it's going to make a big difference, their quick ratio is going to go down, um, and their unprofitability might get worse before it gets better. And I say that because they're going to have to spend a lot more money advertising and getting this on air. Because if it's not already on commercials, I mean, I used to watch The Price is Right. I'm an old soul. I know so many drug commercials air during that time. I don't know if this company airs, but it is. I mean, it's it's something that I think people would like. So, and it addresses the number one killer in the US. Um, so I would feel comfortable adding today all the way down to $1, um, and continuing to add, honestly, because as long as the company continued to make revenues and grow revenues, as long as they're growing and failing forward. So what I mean by failing forward, if they're going to be continue to be unprofitable, I want to see that their sales grow. I want to see uh, their brand get stickier. I want them to spend less eventually because people's friends, senior citizens, maybe even younger people who have heart problems are telling their friends and family who also have heart problems or people in their groups about this, and it's getting around word of mouth, and so less advertising is required. So, number one, they have a viable product that addresses the number one killer. Number two, Potential cup and handle, potential inverse head and shoulders. Institutions are adding absurdly to this. I mean, we saw um, old data was 31%, new data is 65%. Yeah, 65 and almost this is the highest ownership since 20 December of 2021. So, yeah, I like this. I think I like this one. And I'm not adding tens of shares a week. I'll probably add maybe $5 a week until if this continues to go down, I'll start to add more eventually, but I want to take this one nice and slow, really. So, um, yeah, I think they have something good on their hands. So, anyway, if you made it this far, thank you so much for watching. I appreciate you. Have a great day. Consider subscribing if you watched all the way through.